My name is Hannah Merlo,
I'm Brett Friedman.
and we decided to examine and analyze Costco Wholesale for our final project.
So, a little bit about Costco before we get into this. They are an international corporation with their headquarters in Washington. They're the fifth largest retailer in the world as of last year. And they have an interesting perspective to their business as they are members only. So, you need a card to get into the store, and if you don't have that card and you're not a member, you will not be given entry and you'll not be able to have access to their products. Some stat on them from 2016 is they were the world's largest provider of prime beef, organic foods, chicken, and wine.
Here's some historical development. In 1976, they began with Sol and Robert Price as Price Club. And then in 1980, the company offered public shares. And then in 1984, Jeff Brotman and Jim Seingel discussed shifting to new wholesale club business and opened up their first Costco in Seattle. This is where they decided to become a membership type business, which differentiates them from Walmart or Target. And then in 1998, Costco.com was released, bringing products to the internet. And then in 2000, Costco entered into the travel business with Costco Travel. In 2003, Costco.com accumulated sales of $226 million, and their average sale per their warehouse is $105 million. In 2005, over 57,000 vacations were booked via Costco Travel, and then in 2007, Costco.com revenue exceeded $1 billion per year. So clearly they have developed and innovated a lot since 1976, and that is crucial for their growth.
At the industry itself and some of Costco's competitors, as far as a real publicly traded competitor, BJ's is their only real competitor because Sam's Club is a subsidiary company. And BJ's and Sam's Club are both members only kind of models like Costco. Walmart runs a little bit differently, as we're aware. So just running through it, for the founding date, Costco was in 1983, BJ's in 84, Sam's Club in 83, and Walmart in 62. So Walmart's been around for the longest, but then again, a little bit of a different business. And they're all public except for Sam's Club, as mentioned earlier. The number of locations compared to BJ's, Costco has a whole lot more at 804, BJ's at 229, Sam's Club at 600, and Walmart at 11,000. Costco employees, they're 156,000, where BJ's only has 27,000. Sam's Club almost at 37,000, and Walmart at 2.3 million. The market cap for these companies, Costco's at 170 billion, BJ's at 7 billion, Sam's Club obviously not no market cap for them, and Walmart is 392 billion. So again, Walmart is a little bit of a standout as far as the competition shown here, but they run a lot differently than Costco does. So I don't think it would be fair to compare these two. But for Costco, comparing to BJ's and Sam's Club, I would think that Costco is king, just for a couple different reasons. The number of locations, the amount of employees, the market cap, and yeah, they've been around for a pretty long time. So taking a look at stock performance in the last 5 years, we have Costco in the gray up top, Walmart in the orange in the middle, and BJ's in blue. So you can see it's a little bit of a tight race between Costco and Walmart. They were also around a lot longer, so that can add to the company's strength perhaps. And BJ's had a really good comeback in 2020 with a big jump, but it's really historically Costco and Walmart have been pretty similar performances in the stock market.
Of Costco, they are located in 8 different countries, and in each country they offer grocery, gas, pharmacy, optical, travel, insurance, and budget truck rental, and many more things. With that being said, that just shows how diverse they really are, and a lot of their competitors cannot compare to those things. The main thing that differentiates them is gas. A lot of their competitors does not provide gas. Also, their numerous departments is a testament of their financial strength.
Taking a look at the Costco's growth strategy here. Their membership fee, which is, as we mentioned before, it is the members only kind of strategy, attracts upper class, and with a membership fee, it also comes with price advantages in buying in bulk, which can attract the middle class as well. Additionally, millennials like how quickly Costco has adapted to their technology, and small businesses use Costco as well, just because of their price advantages and their ability to buy in bulk. For Costco.com, the internet side of their business, their e-commerce is up 4% of its total sales, and that was as of 2019. But also due to COVID and the pandemic, that has further pushed the technology side of the business. Costco also intends to direct their attention towards the affluent class. Buying in bulk can result in larger purchases, clearly, and they're continuing to work with Kirkland Signature brand, and their high quality products for low prices, which can't be beat. And partnering with these guys has proven to be successful in the past, so they're going to continue to work with them in the future. And they're also just known for their strong customer service and reputation, which they stand by. As opposed to Walmart, they spend billions of dollars on advertising, where Costco has a similar advertising structure and promotional philosophy to a company like Starbucks, where they just put a lot of effort on keeping their name clean. Also, another comparison to Walmart, employees are paid higher wages at Costco.
Some macroeconomic factors for Costco is they have a beta of 0.6, which indicates that it is a defensive stock. This demonstrates that macroeconomic changes has a minimal effect on stock performance, and it may point to the financial strength of the company. From the annual report that Costco provided in 2020, though, they said involving macroeconomic factors, they do worry about general economic uncertainty, unemployment rates, and recessionary pressures. While that is not something that is 100% pressing and concerning them at the moment, it's something that they're always aware of.
Look at some macroeconomic variables in the United States currently. The current inflation rate is 1.25% in 2020 compared to 2019, which was 1.81% at year end. And the 10-year Treasury rate is at 1.63% compared to 1.66% the previous market day and 0.63% the last year. And for annual real GDP for quarter one of 2021, that's at 6.4% compared to the last quarter of 2020, which was at 4.3%.
This slide will be talking about where Costco receives their income. Most of their income comes from their membership fees, and just to add, Walmart does not have membership fees, so that is something that Walmart does not have that Costco does. Costco also makes a minimum for product sales, which is 2%, and food and sundries are 17.5% of their sales, which is the largest contributor. From their annual report of 2020, they state Costco.com played a vital role in meeting members' needs, especially those choosing or required to stay at home. Our e-commerce business saw a 50% increase in sales. Increases were particularly evident in same-day and two-day grocery deliveries, prescription, medications, electronics, and office supplies. Additional strong sales were seen in apparel, appliances, health and beauty products, and home furnishing. Our depots responded to unprecedented volume by shifting certain operations to 24 hours a day, 7 days a week. As circumstances allowed, expansion in fiscal 2020 continued, with the opening of 13 new warehouses. In fiscal 2021, we expect to open 20 new buildings. So clearly they have a lot of developing things coming their way, but their main income is food and sundries from their stores.
Taking a look at the Gordon growth model, this formula and equation allows us to do calculations to figure out approximately where this stock should be valued at, also known as its intrinsic value. And this has it around $117.99. The current price of Costco, it's trading today at $384.42. So according to the Gordon growth model, the stock is overvalued by 69.31%.
Looking at the liquidity slide, we examined the current ratio and the quick ratio. The current ratio is ability to pay off liabilities that mature in 1 year or less, so that's the current assets divided by the current liabilities. And the quick ratio is ability to meet short-term obligations with their most liquid assets, so that's the current assets minus inventory over current liabilities. Just some background on Costco's current ratio and quick ratio. Costco Wholesale Corporation current ratio deteriorated from 2018 to 2019, but then improved from 2019 to 2020, exceeding 2018 levels. And then Costco's quick ratio improved from 2018 to 2019 and from 2019 to 2020. Now, looking at Costco compared to BJ's, you can see that the current ratio for Costco is greater than BJ's. Costco is at 0.99 and BJ's is at 0.72, which is a good thing. That means that Costco's current assets is greater than their current liabilities in a more larger scale than BJ's. And then looking at their quick ratio, Costco also has a better quick ratio, as their current assets minus their inventory is a lot greater than their current liabilities compared to BJ's.
For some ratios regarding Costco and their financial performance, their PE ratio for the trailing 12 months is 39.31, and 20 is around average, or what we'd look for. So their PE ratio is a little bit high, and this shows that if they don't perform, their stock could be in for a little bit of a drop. So in their stock, it also shows that their stock is selling at a little bit of a premium right now. Their justified PE is at 34.72 versus their 5-year historical PE at 9.39, and their 5-year historical PE average at 32.44.
For the solvency slide, we will be talking about the debt to equity ratio and the debt to asset ratio. The debt to equity ratio measures the degree to which the company is financing operations with debt versus equity, and the debt to asset ratio measures a company's assets that are financed by debt. Here you can see the debt to equity ratio for Costco is 2.41, and for BJ's it's 2.65. While they're very close, Costco does have a little bit better debt to equity ratio than BJ's. And then the debt to asset ratio is 0.66 versus BJ's, which is 1.38. 0.66 is a lot better than BJ's. A lower debt to asset ratio suggests a stronger financial structure, just as a higher debt to asset ratio suggests higher risk. So here Costco seems to be a little bit better with those ratios.
So for possible risk factors, we did some research and found some things of concern. First off, Costco may rely too heavily on repeat shoppers, so based off of their members-only styled structure to their business, this may limit them to new shoppers who aren't members. Also, due to the system, prices are so low they barely cover costs. In comparison to a company like Walmart, they're going to have higher prices for what they sell, rather than Costco, which is selling good deals. So therefore, maybe perhaps some profit is getting missed out that way. Additionally, buying in bulk is sometimes not ideal, maybe a little bit inconvenient for those living in cities especially. And lastly, online shopping is becoming more and more popular and having higher demand, and Costco may be slower to adapt to this kind of style of shopping.
For the DuPont analysis, to start with the ROE, you can see in 2017 it was 24.86, and then it had a decrease in 2018 to 24.49%, and it continued to decrease all the way to 2020, and it decreased by almost 3% in 21, as it is 21.7% in 2020. The tax burden increased from 2017 to 2018, and had a steady increase in 2019 as well, and then decreased in 2020. The interest burden is consistent throughout at 0.97. The EBIT margin is at 3.28% in 2017 and increased in 2018 and then decreased in 2019 and 2020. The asset turnover is at 3.47 in 2017 and continued to decrease, and now in 2020 it's at 2.94. The leverage was at 3.37 in 2017 and decreased all the way to 2019 and then increased in 2020 to 3.04. The primary reason for the decrease in return on equity ratio over the 2020 year is the decrease in efficiency measured by asset turnover ratio.
So in conclusion, after doing our research, Hannah and I kind of came to the decision that we were pretty neutral on Costco as an investment. The two things we were most hesitant about were the fact that the Gordon growth model showed that this was pretty overvalued, 69% overvalued, and as well as the PE ratio being in the mid-30s, 36. And this just shows that if they don't perform as well as the expectation, that their stock could be in for a significant drop, which would be a bad sign to an investor. Also showing that it's selling at a premium right now, and probably wouldn't be a good time to get in. However, on the other side, they're in very good shape, in opposition to their competitors. It is a very niche market as a wholesale, members-only kind of style business. And as far as the direct competitors such as BJ's and Sam's Club, I don't think it would be as good of an investment on their end. I think Costco has better financial strength, and this is the one I would go with if I was looking to invest in a company like this. Thanks for listening, and hope you have a good one.
Here are our references if you need to reference anything, and thank you for listening to our presentation.